Hey guys, Brian here. Hope your week's going great. There's an interesting 2-year cycle of peaks in optimism that's been going on for about 6 years now. In this video, I'm going to show you this cycle because if it is still operative, we're in a time window right now where we could see a big surge in negative sentiment. Stay with me. All right, guys, welcome back. Real quick before we look at this cycle, let me just show you where I've been the last few weeks. I've been traveling around Hokkaido in northern Japan, and this is the view coming down the ropeway of Mount Hakodate. Very, very cool little city. I really loved it here. There's some interesting financial history here, too. Hakodate was one of the first Japanese ports to open to international trade. 1854, there was a convention that ended Japan's period of isolation. Hakodate saw this influx of foreign traders, and it was a big historical event that really played a major role in modernizing Japan's financial system. The other interesting thing is that Hakodate was the capital of Japan's first attempt at a republic of Ezo. A group of samurai rebelled, tried to set up a Western-style democracy. It lasted 5 months, was overthrown in 1869. But for the time, it was a huge departure from feudal Japan and toward a modern governance system. So super interesting place. Really glad I got a chance to visit. But let's take a look at this cycle. Top graph here is the Dow. Bottom graph is the VIX implied volatility index. We have inverted this to align with stocks. So the tops in the blue graph here are low VIX readings, which show high complacency, extreme optimism, right? Those readings align very well with peaks in the Dow, as they should, right? The cycle here is fairly clear, right? Every 2 years, 2018, 2020, 2022, the inverted VIX, it hits a cycle high that coincides with a high in the Dow, and that leads to some kind of sell-off. So I'm bringing this up now because this cycle is due to reverse again. The window was November to January, so we're on the tail end of that turn window. The cycle is especially compelling right now because of some other indexes that show what I'll just call dangerous levels of optimism. This is one of them. Stephen P. published this chart in the January financial forecast, subscription links below. It's the bullish percent in the weekly AAII poll, famous poll showing expectations of retail investors. So this is not institutions, it's mom and pop. Bullish percent just hit 61%. That's the highest percentage since the first quarter of 2021. That, if you remember, is when the mania in SPACs ended, when the IPO mania ended, when the mania in meme stocks reversed. That's where we would have to go to find a time when mom and pop were more enthusiastic than they are today. The behavior of retail traders, it's a contrary indicator, and their commitment to the market is extreme, and we think it's going to change dramatically during the next wave of declines. Let me know what you think in the comments. Again, subscription links below if you'd like to see more of this kind of analysis. And thanks for watching.